Hey guys, Dave with Moniology here. This is the Moniology Markets Review for the uranium sector for November 25th, 2018. I'm going to do a live review of going through the uranium sector as I do for myself and for my private investors. So let's take a look at what we're seeing here on the uranium monthly chart. So we're still in the consolidation pattern. Monthly doesn't really show much, but what it does show is that the MACDs are converging, and unless they roll back higher, it is showing a declining trend in the moving average convergence divergence. When you look at the weekly, you're still in this wedge here, and every time we seem to hit this particular line of resistance, we seem to fall back. I don't like what I'm seeing here, to be honest. I would have expected a breakout at this point, and I'm not seeing it. I know the market's pulling back right now, but at the same time, the market's showing a lot of signs that we might see a serious rollover, possibly a recession type of economy in the next 12 to 24 months. So this would impact uranium as well. And if this breaks below $12 on the URA, I would not want to be long this particular ETF. Now looking at the daily, here's what we see. Every time we seem to hit kind of this trend line here, we haven't been able to hit the 50, break the 50 RSI right now. And again, if this breaks that 12 level, possibly a little below 1153, this would not look good. You see the PPO has broken below zero right now, so we're going to see a couple of days of negative price action, I would believe, and then thereafter we'll see if there's some double bottom here, possibly positive divergence. That'll change my view. But at this point, I'm not liking what I'm seeing in uranium. On a shorter time frame, on the hourly, here it is again. You might see some support here because this is the last point we rallied. Was right over here on the RSI. We're about here again, so we might see a rally next couple days, fill this gap right here. Coincides with middle Bollinger Band around that 1240 level. But ultimately, I think we're going to see that 1150 level again, and then we'll have to see what happens thereafter. But ultimately, this URA chart is or this index is so heavily weighted with Cameco. So let's see what the underlying names, especially in the small microcap space, are doing. Start with API Energy. It had a fairly good week actually. Closed with a hammer pattern, and this looks like it actually might break out to the upside. So this is one name to consider if it breaks above that 30-cent zone. Blue Sky Uranium Corp, similar kind of cup and handle here. On the one hand, this is a bullish price pattern, but until this breaks this trend line, I would err to caution. There's nothing positive I'm seeing at this point in this particular chart. Cameco, here's the major player. One thing I'm pointing out, look at this. You're seeing multiple new highs in price, and you're seeing multiple new lows basically in momentum, and that's negative divergence, not something you want to see in a bull market. If it breaks above 13 and it can break above on momentum, I'll change my paradigm. But for the first time in a long time, I think that Cameco wants to go lower, not higher. Canalaska Uranium, look at that ugly pattern, ugly candle last week, down almost 20%. I'm not sure if they raised money or whatnot, or this was just a market-related move. But if this breaks below 20 cents, this could go all the way down to 10 cents. There's really no support here for this name. Deep Yellow, another one. Now this one had looked really good for a while, and it might find support at that 50 RSI, which is the last point that we broke out from. But until this breaks this 42 cent mark, there's really no reason to be long. There's just too much risk here. Obviously the chart looks great. There's something going on with the company that it rallied from 0.0001 in end of December all the way to where it is at 42 cents. That's a 25 bagger there. But has it reached the top? We'll see. Denison Mines Corp, it's struggling around that 50 RSI. If it can find support, coincides with the 50-week moving average here, that's great. But now the PPO is below zero. If this breaks below 50, this could see a very nasty decline all the way down to 40 cents, if not lower. So I'm being very careful, and I'm watching what happens. It can go either way. but right now my caution flag is up in the uranium space. Here's another name it's holding right now at the 50 RSI. That's positive, but it closed the week below the 200-week moving average. If it holds, that's very bullish. If it doesn't hold, then you might see a retest at that 5-cent zone. So let's see what happens. Energy fuels, another one. You had multiple highs in price, but you had continuing decline in momentum, and that's not a positive sign. So this pullback is actually a healthy one, but it needs to hold this 50-week moving average around 257. It needs to hold that 50 RSI zone. So I'm watching very closely at names like this one as well. Fission Uranium. Well, this one couldn't break the 50 RSI zone, and that's very troubling. It's rolling over below the moving 50-week moving average here. So I would expect to see, if it can't recapture that, I could expect to see 40 cents being retested here to the downside. Forces Metals, another one that had been looking very, very good, but again, as I pointed out in previous videos, you got multiple highs here, but momentum wasn't creating multiple new highs. It was kind of like flat, and it couldn't break that 70 zone, and now we're retesting 50 with negative divergence. What do I mean by that? We're at 23 cents, and momentum is basically at the same level as it was when we were at 21 cents. So momentum is leading price lower. If this breaks below 50, I can see this headed back to 15 cents, possibly as low as 10 cents. So on the one hand, great buying opportunities, but if you're long right now, be very cautious. Gold mining, it has a big uranium mine here that they have optionality in the uranium space. So I got this in this particular review. I think that there's a lot of upside here with its gold and precious metals portfolio, very diversified, and it looks like it's on the verge of bottoming and breaking out here. When you look at the daily and other time frames, I like what I'm seeing with gold mining as a great management team, and frankly, if this breaks out, this could see, obviously with precious metals, if they break out, as I believe they will, stay tuned for my precious sector review. I think that gold mining is one of the better names in the space. Could see a multiple 5-10 bag type of move. GVX Uranium, another one that had broken out here, but it couldn't hold the 50. Then it retested it from the downside, and now it broke down below. Not a positive sign. This could see much lower prices if it cannot hold that 12-cent area. Laramide Resources, another one, broke out of this positive, out of this bullish wedge, kind of a coupling handle right here, and now it's retesting it, but it's breaking below the 50 on the RSI. That's a very negative sign, and if it can't recapture that this week, I think that it's going to see 20 cents, possibly lower, in a market downturn. Nextgen, also one of the best fundamental plays in the space, and it looks like it wants to move higher. Right now it's retesting the 50 RSI zone and needs to hold this. It's crucial. If it breaks below $2 and breaks below the 50 RSI, I expect a very, very painful week in this particular name. Sky Harbor, another one of those great fundamental plays, but it's breaking below the 50 RSI zone. Not what I'm like, well, not what I'd like to see in a bull market. Now, it had shown positive divergence, but what right now you're seeing is that there's just way too much supply overhead around that 40-cent zone. So every time we hit it, we seem to be hitting a sell-off. So we'll see what happens there. UEX Corp breaking down. Not positive. This is something that if you're long, you want to exit your position, frankly, right now. I mean, I think we're headed to 10 cents. We break below 10 cents, this can go much, much lower. Uranium Energy couldn't break below above 90 cents, couldn't create positive divergence on the RSI, and so it broke lower. Now it tested that 59 to 60 cent level, found support here on RSI, but we couldn't break above that 50 RSI zone. Now we're going backwards. Let's see what happens. On the one hand, you see some positive PPO momentum. This could be construed as a bullish flag here. So this one, if it can break above 50 RSI, it can have a nice move higher. But if it can't, then this will probably be taken down by the rest of the uranium sector. Here, Uranium Energy, probably one of the best fundamental names in the space, and it had been acting very weak even as the uranium sector had been strong over the last couple of weeks. It's showing some positive divergence. You see a double bottom in price, but momentum is stronger here than it was here. So I could actually see a fairly strong rally in this name. It's kind of quote-unquote the defensive stock in the sector. With properties in the U.S., I think that there's a lot of potential here. This could probably see $5 to $10 a share in the uranium bull market. So stay tuned for that. So if you want a more conservative, quote-unquote conservative name in the space, and if you believe that sector is going to be bottoming soon and perhaps already doing so, this is when you really want to consider, and its technical strength right now is a positive sign. Finally, we're going to take a look at Western Uranium Corp. This has been one of the strongest names in the space. It couldn't break above that 70 mark the second time around, and so it's pulling back. I'm not going to go long here unless it breaks 220 to the upside or hits that 120 area of support to the downside, possibly as low as $1. So let's keep an eye on this one. So far, it's holding support at 61, which is very positive. But at the same time, with the rest of the uranium space, I don't think that right now is a good time to consider buying. Buy on strength above 220 or buy on weakness between 1 and 120. Finally, Western Water, the stock that I really don't like. I mean, it's just getting killed every time it hits this downward trend line, and if it breaks below that 15-cent zone, as it very well may do in the coming weeks, I mean this looks like it's a bankruptcy candidate, or certainly a reverse split candidate, which is definitely not a situation that you want to be in. Anyway, guys, that's it for the uranium sector review. I appreciate you watching. Have a great week.